Good afternoon. I am Kevin Hayes. I'm the Deputy of Appraisals with the Pinellas County Property Appraiser's Office, and welcome today. This is a presentation for property tax processes for businesses, and we appreciate everybody joining us today. I'd like to introduce our presenters, Lori Dorian. She is our Director of Tangible Personal Property. And we also have Kalani Cooner, who is one of our senior tangible personal property appraisers, and they're going to go through the presentation today. I would ask that for those of you that have joined us online, if you can just put your questions in the chat. Kyle Holton, who is our Community Communications Manager, will be monitoring the chat for us, and Lori and Kalani will also have a section in the presentation where they're going to open it up for questions. So please feel free to ask plenty of questions, and we would love to answer any questions that you have. So without further ado, I would like to introduce Lori Dorian and Kalani Cooner. Thank you.
Thank you, Kevin. Well, thank you for joining us today. Welcome to our public education hour for tangible personal property. We're going to try and give you an overview if you're new and you've never filed a tangible return before. And we're also going to talk about our website. So hopefully if you are seasoned and know what we ask on the returns, you'll get some information on the new website. So hang tight, sit back and enjoy. All right, so what is tangible personal property? Well, we get this question quite a lot because we have a lot of new businesses that come from out of state, and they're unfamiliar with the ad valorem assessment of tangible personal property. So our appraisers are always educating people on this. So what is it? It's everything other than real property that has value and used in a business. And that's your furniture that you bring into the business, your fixtures, your equipment, and your improvements to that lease space, those leasehold improvements. So how do we assess? Well, it's a form that has to be filled out every year. You have to fill out that DR 405 that's required by Florida statute 193052. And it applies to every business, whether you're small mom and pop or major industry like the utilities. Every business has to file that return with us. Sole proprietor, partnership, S Corp, C Corp, independent contractor. If you have equipment, you need to file that return. So by the numbers, our department is responsible for the assessment, which means ad valorem or according to value. We value very similar to the residential property and the commercial property, except we're looking at the contents inside the structure. We maintain over 30,000 business accounts with approximately 10,000 generating a tax bill. That is because in 2008, the state enacted the $25,000 exemption. And ever since then, and if you file that return, you get that exemption, and that eliminates your tax bill. So last year for 2022, our tax roll valuation was $6.6 billion in assessed value. That's what we're saying the equipment in Pinellas County is worth, their fair market value, but the taxable value is $5.4 billion after the exemptions are applied. So what that means, if you look to the chart, the pie-shaped chart to the right, we assess about 82% of our businesses are in a commercial setting, 11% are home-based businesses, and 7% are what we call freestanding or leased equipment. And what that means is it's equipment that doesn't have a storefront to walk into or a business to walk into. It's located all around the county. That would include your vending, your towers, your utility lines and poles. Lots of equipment is freestanding that you don't really necessarily look at, but that needs to be assessed as well. So industry by type, if you look at this graph, the bars, the blue bars indicate the type of industry with the taxable value. And if you look at the far left, utilities, that's our biggest taxpayer. almost 1.6 billion. And that's going to include your gas transmission lines, your electricity generation, any infrastructure that is used for the public is going to be in that utilities. However, we don't have that many accounts. So the yellow graph, the yellow line shows that the number of accounts is very low, but the value is very high. And look at that compared to our manufacturing. Manufacturing, we have almost 800 accounts, and they're about half the value. And as you go down, you can see the different industries that we assess in our office in Pinellas County. So let me go into some of our challenges in tangible personal property. We're always outreaching to the business community. As I said, we have some people that come from other states or just from anywhere else in the county, in the state. And we have about 5 field appraisers that are going out. They go out each year and try to let the new businesses know that, or the businesses that haven't filed with us, that they need to file. So communicating that you need to file that DOR 405 is one of our biggest challenges. And what needs to be reported on that return is another challenge. If you don't file that return, you're not going to get that $25,000 exemption, especially if you're a new business. That first year, it's critical. It's your application to get that exemption. Just like your application if you buy a home to get your exemption on your home. You got to fill out that form. So failure to fill out that form, you lose the exemption. You also accrue penalties, and that could be up to 25% of the assessed value. And you're not having an input into what the value is of business without providing us with information on that return. So I would say that's something that's pretty critical. One of the things that people forget also is the things that you don't necessarily think about when you're filling out that form. And I want to give you an example. A gas station. Most people see the retail store that you go in and you get your coffee and your donuts, or the gas pumps where you pump your gas. But they forget about that there's more equipment there. There is a tank underground, and that's tangible personal property. And that's the biggest chunk of what it costs to install a gas station. So some of the things have to be that don't necessarily come up when you're filling out that return, you don't think about, but that's part of the return. And our appraisers are very helpful in helping you fill that out. Another thing that we have some challenges with is the value of specialized machinery. We have to assess everything from your small mom and pop shop to, as I said, the major utilities and everything in between. We have hospitals. If you live in Pinellas, you know the different types of businesses that we have here. We have a lot of manufacturing. So AI, you know, they're moving into more computerized equipment. And we have to be able to assess that equipment and know that it's here in the county. So that's a challenge that we face each year. The final thing that I want to bring up is trying to go, sorry, went too fast. Let me back up. Trying to go into switching to a paperless environment. So the returns, if you file that return, and we're going to go into this a little bit with our new website features. If you can file that with our through our email address, the TPP confidential at pcpao.gov email address, that eliminates the requirement to mail that return to us. That's going to take time. Sometimes it gets lost. You get it if you file through that email, you'll get an automatic response that we received your return, and then we can just download it without actually touching paper into our computer system. So that's one of the things we're trying to push more people to our website and to our email address to communicate with us. So less paper, more direct, and hopefully make it a lot easier for both sides. So with that, I'm going to pass this on to to Kalani Cooner. He's going to talk about the website and go over some of the features on our website.
All right. Good afternoon, everybody. Recently, the Pinellas County Property Appraiser's Office started a new website and made life for us a lot easier. They made it more user-friendly and streamlined it. I figured we'd go through a sample of what an account looks like in the tangible division. Today I picked Publix. I figure everybody has gone to a Publix. So in the left side of the screen, you'll notice that it has the DBA, the name of the business, the ownership of the business, the mailing address, and the physical address at which it is located. As in moving over closer to the center part, this is where things made life easier for hopefully the public and definitely for us. If you notice, they will tell you what taxing district you're in, what mill levy that you're associated with that taxing district. If you want to verify whether you filed your tangible tax return or not, it will list that at the center screen. It'll also notify you if you have any penalties associated to the account, as well as whether you or not you received your exemption. Also, if you notice, it would also say if you have an extension, so you can check that as well. And we also included an aerial photo of the business so you can actually see what it looks like. If you ever need to search for a specific account, whether it's yours or someone else's, it's all public record. On the top of the screen, you can search by the business owner or the name of the business. You can check out the account number if you have one personally assigned to you. You can also check by NAICS code, whether it's a business specializing in restaurants or manufacturing. You can search by that as well, or by the physical address of the business you're looking for. You can search through that way as well. On the bottom left side of the screen, you'll notice that there's a variety of links. There's a link to your trim notice that will tell you the approximate taxable value and whether you got your exemption or if there's any penalties associated with your account. Also, there's links to the tax collectors. If you want to see if there's a current outstanding bill, you can immediately be transported to that. Now, as far as whether you filed your tangible tax return, let's take a look as far as what one actually looks like. In the top part of the screen, we have major information regarding your business. We have the name of the business, the mailing address you would like your mail be sent to for that location, as well as if you have your FEI number and the nature of your business. You can designate whether it's a restaurant or manufacturing, etc. Now, in order to get this form, you need to download it from our website, and it's an interactive PDF. So on the second page, say you need an additional schedule, you can just click the button and it will create one for you. Also, if you notice on the screen, there's a little red block on the bottom right, and that is your submission button. Pressing that will submit it to our website, and it is encrypted, and you will automatically be given a read receipt, and that would be your proof of timely filing. Speaking of forms, if you check out the next page, has a list of everything you could possibly need. It has a link to a DR 405. Also, for anybody who's familiar with Excel, such as CPAs, we have templates that you can use, whether it's a single business account, or whether it's a freestanding equipment or leased equipment, as well as the economic life table that Lori previously mentioned, breaking out the categories of depreciation. Another thing you can look for is they have a report of personal property changes, anything you've done differently to your business, as well as filing an extension. Now, as far as requirements for your TPP return, anybody who's entered the county who's starting a business, their first year business, needs to file the DR 405. Even if you are under the $25,000 exemption, you have to file to receive that initial exemption to be placed on a revolving basis. You need to also report any assets that you removed from the prior year on the tangible return. That way you're not paying any sort of taxes on equipment that you don't actually own. On the second page of the return, you need to report any leased, loaned, or rented equipment and the name of the person that you're actually renting that from. We have a section for leasehold improvements. Like I said, the more detail you can give for leasehold improvements, the better. That's more of our gray area, as Lori previously mentioned. Say you have a gym or a dance studio. You might have a specialized flooring board. If they're raising the flooring in a computer room or adding air conditioning to a server room, that would be considered a leasehold improvement because it's part of the functionality for the business, or a decor package for retail stores. Now, the available extension that Pinellas County provides is, of course, after you file the DR 405, is a $25,000 business extension with a timely return. Also, we offer 80% renewable energy exemption. As we are in the Sunshine State, it's pretty much going to be solar, and that is an 80% exemption as long as you filed in 2018 or more recently. We also offer up to 100% institutional exemption for anything for religious or charitable organizations, educational, literary, or scientific, but that would be the DR 504 that needs to be filed by our office by March 1st. There's also an economic development fund, and that's the DR 418. Now, as far as personal exemptions related to your account, besides the $25,000 exemption, if you're blind, disabled, or if you're a service-connected disabled veteran, or if you're a widower, you can get an additional $5,000 taken off, an additional $5,000 exemption, but you're only allowed to have 2 exemptions. Now, if you need to file an extension, like Lori said, the tangible tax return is due at April 1st, so that only leaves a couple of weeks. Typically, it's always nice if you have more time. So if you require a 30-day extension for your specific account, you can file one on our website, and it will be automatically linked to your account and grant you an additional 30 days. Since it falls on a Monday, it will be May 3rd this year. All we need to file an extension is the name of the business, the actual physical location, and if you have an account number assigned to your account, we would prefer that, but if you don't have one of those, an FBI number will be acceptable as well. Now I can't tell you how many times we get a notification once, sometimes over a year late, as far as a business moving its location, or they moved out of state, so they need a new mailing address, or that they terminated their business and closed their doors within the county. From our website, you can directly download this form that will update your account. Say you move to a different location and you want to notify us, you can put it here, or if you close your business, you can do that as well. As long as you notify us as soon as you sell a business or close your doors or move locations. Now, every once in a while, people would want us to come visit their facility. Say they don't know what to file. They don't know how to fill out a DR 405. They don't know what in the facility a leasehold improvement is or how to pick it out. You can send them this request per our website, send it in to us at the TPP confidential, and you can request a staff appraiser to visit and tour your facility or business. And that way we can help you and assist you to go through the tangible tax return. We can help you, let you know what is taxable, what is not taxable, what you should file on, and what you shouldn't file on. Now, let's say you're under the $25,000 exemption, you're placed on revolving basis. In January, you will receive this tiny yellow card stating that you are exempt from tangible taxes. Probably good news for you. So if you get this card, that means you're under the $25,000 exemption, and you will be placed on a revolving basis and receive this every year in January. Now, let's say, however, you do add a substantial amount of equipment to your business and it raises you over your $25,000 exemption, you are required to file the DR 405 to let us know and update us. Even if you get the yellow card, if a tangible tax return is sent to you, that means that an appraiser has visited your location and thinks that some items may have been missed from the return. We would like you to file on those discrepancies. So from now, if you would like, I'd like to introduce Lori back to the podium, and she would go over a breakdown of our economic life table so you get a better understanding of that.
Thank you, Connie. Okay, so we're going to look at this slide. I'm not going to get too involved in how this table is created. I just want to give you the basics on what this means. This table. It is posted on our website. It's the last thing that you're going to see on our website. It's calibrated each year, and every year we'll roll it over to the next year once we determine what the table should look like. Take my glasses off here. So this is the 2023 Pinellas County Economic Life Table. We use this to assess the majority of our business accounts. Across the top, you'll see the word life and the age 3, 4, 5, 6, 7, and so forth. That's the age life that we place your equipment on. So if you're very descriptive on your tangible tax return, it will help us pick the right category to come up with the fair market value. So this is a percent good table. So for example, a 4-year life category that you see in yellow with the number 81 at the top, that's 81% good. So if you say to us, oh, we have a computer that we purchased in 2022 and it's $1,000. Well, I may not use that table because I'm looking for specifically PCs or laptops or a shorter lived asset. When you say computers, I don't know if you're saying server. I don't know what you're saying in that word computer. So we might go to the 85% good under the 6-year table. So the better you describe the type of equipment that you have in the business, the better we can pick the right table and come up with the assessed value. So $1,000 piece of a PC that you purchased in 2022, 81% good the first year, $810 is the assessed value. Second year, it'd be $660. Now I said this changes though every year. So some of these numbers will change slightly. What you see in the blue is where we will bottom out for that type of equipment. So we'll go down to 10% good on many of the assets, 5% good on the computerized equipment, and then the longer lived assets will be 20%. Inflation has changed this table drastically. So instead of increasing the value, you'll see the blue for the higher lived assets starting in 9 years to 30 years. Instead of going above 100%, I smooth the table out so that it's not increasing the assessment over what you paid for the equipment. And the bottom half of this is a description of all the types of equipment, just to give you an idea what life code we would use. For those of you that have filed before, this is how we've come up with the assessment. So you'll see 3-year life equipment, uniforms, videos, rental wearing apparel, cell phones. If you report a cell phone, we'll put it under a 3-year life. If you report a phone, we'll put it under an 8-year life. So it's how you report your equipment will help us determine what life we want to put this category, we want to put it under. So I just wanted to give that some attention, just so you understand how we're coming up with the assessment. This makes it fair and equitable as long as you file that return with us. This is a table we use for the majority of our business accounts. So with that, I'm going to go into the important dates for tangible. January 1, that's the assessment date. If you're in business January 1, we're going to assess you that year. It's also the time of year that we're going to send out that TPP waiver notice, that yellow postcard that Kalani talked about. If you had filed with us the prior year, you're going to get that yellow postcard saying you don't need to file again unless you add more equipment. We're also going to send out the DR 405. If we have you on our records, you'll get that in January as well. In March, you're going to need to file any of those real property exemptions that also apply to tangible. And March 31st, as Kalani pointed out, is the 30-day extension deadline. That's open on January 1 and closes at 5 o'clock on March 31st. And it's shut down until we roll over to the next year. So if you need that extension, don't wait, fill out that form and submit it, and we'll be happy to grant the 30-day extension. There is another extension. This one, the 30-day extension is we must give you that extension. There's another 15-day extension that is not required. And if there is any extenuating circumstance, we would want to know that even to grant that additional 15 days. Because once April 1st comes, the returns are due. We are inundated with a lot of returns, a lot of mail. The appraisers are starting to work those returns. If we let everybody go down to 45 days before they need to file, it's hard for us to complete the year. So we only usually grant the 30-day filing extension unless you have an extenuating circumstances for another 15 days. So April 1st, returns are due. I can't emphasize that enough. Returns are due. If you fail to file that return, penalties accrue. 5% a month up to 25% of the assessed value. If you have a lot of equipment, it's a big penalty. So I really want to emphasize that date. Unless you have that extension, then it would be, well, this year it actually happens to be April 3rd because the first falls on the weekend. And so does the, it gives you 30 days, so you'll get to May 3rd on the extended date. So please either fill out that extension or fill out that return by the due date. As I said, the appraisers are starting to process those returns in April, and they may send you some letters if they have a question on the return. So if you do get a 30-day letter from us asking for additional information, please address that, because that helps the appraiser get the right assessment. It helps you and it helps us. We also send out that second notification. If we didn't get a return, we want to make sure you know that we didn't get the return. You could have sent it and the mail didn't come through for some reason, or it got attached to the wrong account, or it's hidden somewhere in the in the crevices of all this paper. We're going to send out a second notice saying we didn't get a return, and if you did file, please resubmit and say you've already filed. If you haven't filed, we give you that 30 days and we would be happy to grant that extension, that exemption. Because if you don't file by April 1st, the statutes say we can eliminate that exemption, that $25,000 exemption. And that's a big number for a lot of businesses. So you definitely want to try and either hit that April 1st date or pay attention to the letters that we're sending out. By mid to late August, we're sending out the trim notices. That's the notice of proposed property taxes. It's mailed to every business, every new business that we put on the roll, and every business that has a taxable value. I can't emphasize looking at that. That's critical to look at, and just to see if everything that's on that extension, on that trim notice is correct. Maybe you did file and we didn't get it, and you didn't, for some reason you may have moved and we don't know where you're located and you didn't get our letters. You need to look at that trim notice to let us know, well, I did file, or I moved, or I'm not in your county. Just let us know if there's any issues with the trim notice. Perhaps you don't like the assessment. Then you have the ability to file a petition at that time. There's 25 days once you receive that trim notice to take action on your account. And we have a well-trained staff who's ready to take your call. They're very pleasant. They'll help you through any of your questions. So please give us a call at that time when you get that trim notice. October is when we certify the roll to the state of Florida. And by November, the first bills come out. So I just really want to emphasize our April 1st date and that trim notice. I talk to a lot of businesses once that trim notices go out, and sometimes it's the following year and it's a little late for us to do anything. So I just want to make sure that I can emphasize how important that is. My husband probably would throw that out. Don't throw it out. Please look at it. So our staff is ready to help and with any questions. So please, when you get anything from us, give us a call. Everybody's very happy to answer any of your questions. So with that, I'm going to open it up to any questions. If we have any questions out there on what we've talked about so far.
We have one question, and it says, I'm new to TPP and wondering what the purpose is. Is there a tax assessed on the return, or is it used for another purpose?
If I understand, you're asking why do we have to file a TPP return? And would you get a tax bill as a result of it? Is that kind of what the question is asking?
Correct.
So as we said, if you are a small business, the majority of our 66% of our businesses don't have a bill. And that's because they're small. They don't have a lot of equipment. They have maybe they have a small office, or they could even be, or a restaurant that's been in existence for a long time and they just took it over. our table takes everything down to 5 or 10% good, so it depreciates very quickly. So if you are a small business owner, fill out the form. It's required. You need to let us know what you have. We need to put you on the roll. Once we have you on the roll and that form has been filed, we'll grant that exemption of $25,000, and you probably would not get a bill. But it is required. It's one of the revenue bases for the state of Florida. It follows the same statutes as the real property does. So if you own a home, if you own a commercial building, we follow those statutes. This just happens to be on businesses and businesses only. It's on the equipment in the business. So if do you want to add anything to that?
Yes, and like Lori said previously, we only a third of the tangible accounts inside of Pinellas County actually receive a bill. And to put things into perspective, $250,000 of equipment fully depreciated, you will still be exempt and not receive a bill. Mind you, that is fully depreciated, but that is a substantial amount of companies. So even if you had all the equipment and you listed when you purchased it and the original installed cost, although you're going to be exempt unless you, or very low. So.
Any other questions? Okay, well, I want to just go on to some information about our office. Just for your information, we're going to go through a couple more slides, and that's going to conclude our presentation. So the first thing is to stay in the know. Oops, did I go? No, stay in the know. Follow the PAO. You can sign up for one of our newsletters, our e-newsletter tailored for 3 groups. We have one for the homeowners, the real estate professionals, and the business owners. You can sign up for any of those. You can follow us on Facebook, YouTube, or you can attend one of our in-person or virtual public education sessions. So stay informed. There also will be press releases on our website if something is happening. We'll be able to put something on our website about that as well. Any trends, any new legislative events that are happening. So the education series is always at this location at 2500 34th Street North, 2nd floor. It's a very nice facility. Welcome to come and join us in person, or you can sign up virtually. We've had series on first-time homeowners. We've had property tax exemptions, real estate professionals, and a new one that should be coming out soon is the website tools and navigation. It's a wonderful new website that has a lot of features, and hopefully that will be coming out soon. So check back often on these events and register at our website at www.pcpao.gov. The final thing I want to bring up is something from the clerk's office. Ken Burke's clerk's office. They offer a free monitoring service. If you own real property, there has been instances where fraudulent documents have been attached to a property, for an example, a deed, and that can cause major problems, almost to the point where you lose your home. So you want to, not to frighten anybody, but you want to sign up for this free service, and that's at the www.mypinellasclerk.org, or you can give them a call. It's a tool that you want to have in your toolbox when in regards to your property. With that, we are done with our presentation. If anybody has anything else they want to bring up at this point, we're available to talk about it. Have we done such a good job? Okay, no questions. Thank you so much for joining us today.